Welcome to today's webcast presentation, Improving Firm Profitability Through Project Accounting. My name is Bob Drake, editor of Civil and Structural Engineer magazine, published by Zweig Group. Thank you for joining this webcast, which is sponsored by CORE, powered by BQE. Before we begin today's presentation, first some general information about the webcast and the GoToWebcast platform. The views of the speakers and organizations participating in this webcast are their own and do not necessarily reflect those of Civil and Structural Engineer or its publisher, Zweig Group. If you have any technical difficulties while viewing this webcast, please submit questions or a brief explanation of your technical problem using the Ask a Question box on the left side of the webcast dashboard, and a representative will assist you. Note the button in the upper right corner to enlarge the slide viewing window if desired. During the webcast, you also can submit questions to our speaker using the same Ask a Question box. Submit your questions at any time, and we'll try to answer as many as we can later in the webcast. Zweig Group encourages group learning for our events. So if you're reviewing the live webcast with a group on one registered person's computer, that person must complete and submit the multiple viewer registration form for the group in order for everyone to earn credit. Download the multiple viewer registration form from the event resources on the left side of the webcast dashboard. Submission instructions are on the form. Also note a link in the event resources section to download a PDF of the slides in today's webcast. Details on downloading a certificate of completion will be provided later in the webcast. Viewers of archived webcasts must pass a quiz in order to download a certificate of completion. Additionally, at the end of today's event, we will provide a webcast evaluation survey for you to submit your feedback. Today's presenter is Stephen Burns. Stephen is a licensed architect and a member of the College of Fellows of the American Institute of Architects. He sold his architectural firm in 2007 to work full-time on the startup he launched to create ArcOffice, and now guides the development of BQE Core, the cloud project accounting platform. He earned his Master of Architecture degree from the Harvard University Graduate School of Design and his Bachelor of Fine Arts from Syracuse University. His passions include ultra-endurance cycling and working with Los Angeles social venture partners to help innovative nonprofits change the landscape for social justice. So let's get started. Stephen, I'll hand it over to you.
Okay, great. Thank you, Bob. And I guess the slides are showing up fine. Should be on the speaker slide right now. But thanks for that introduction, and everybody, thank you for joining us today. Over the years, I've really given dozens of presentations, mostly at AIA events, but other similar industry conferences, and I've spoken a lot about nearly every facet of running a successful AE practice. But lately, I've been on this soapbox preaching the benefits of today's subject, which is really project accounting. Also, please don't hold this against me. As Bob mentioned, I am an architect. Actually, I'm more of a recovering architect since I really morphed my career from that of a traditional architect to a software developer. But I did have more than 20 years in a traditional practice. I've worked in firms with over 2,000 employees before I had my own firm, where we had 17 architects on staff before I sold that firm to really focus on software, which has really given me the privilege to be on site in hundreds of firms. One year I was in over 200 firms in a single year. So I get to see a lot of what's going on in the field. So a lot of that has also helped me form my opinions that we'll be talking about today about project accounting. Also, I want to apologize because as an architect, I'm a very visual person, and typically I want my presentations to be visual, to reflect that. But this webinar has a lot of dry material, and I'm going to have to apologize right up front that we're going to spend about half this presentation going through some bullet point slides. Sometimes I try to put nice images in them to help pepper them, but didn't get around to that today. So we're going to have a lot of things to talk about without a lot of great visuals until the latter half. So I just wanted to warn you about that up front. Okay, next slide should be here. Okay. By virtue of the fact that you're even attending this webinar, I am going to applaud you for recognizing the importance that accounting plays in the success of your projects, and by extension, the success of your firm. A lot of managers or project managers believe that accounting is really the domain of those in the firm who are responsible for administration and finance. However, for firms that want to maximize profits and efficiency, an appreciation of project accounting is absolutely essential. So I'm going to take a few minutes here to discuss what project accounting means, and then we're going to dive a little deeper into the things that your firm can do with regard to the subject that can significantly improve your profitability. So first we start off by defining what we mean by project accounting and why you really have to care about it. Most engineers and architects aren't really well versed in accounting practices. Typically, they'll get a simple accounting software program like QuickBooks when they open their firm, and then they do the normal accounting, which hopefully we are all familiar with. And very often you run reports like a balance sheet or an income statement just to get a sense of your financial situation. Like, is there money in the bank, and how much is that, and how much money do your clients owe you, and what's the value of the invoices that you need to pay? It's kind of the general stuff. And an income statement or a profit and loss statement is a snapshot of the overall health of your firm, but it tells you whether you made or lost money during any particular period. And while that's nice to have, it doesn't tell you enough about why it is the way it is. So if you're losing money, where is this happening? What's wrong, and how do you fix it? So an income statement is really just reporting information. It doesn't tell you how to improve the situation or even where to go to start improving it. And that's why we need to think or rethink accounting and start applying project accounting techniques. Okay, so in order to get the ball rolling here, we're going to do a quick slide. Hang on here. No, I guess I have that out of order. We're going to do a poll in just a moment. So, so what is project accounting? Oh, hang on. Hit the wrong button there. It's this button. I think we have a slide out of order here. What is project accounting? Yeah, okay. So Beth, can you run the poll question right now? Because I think I had a duplicate slide in there. So before I wanted to get into what is project accounting, I wanted to run this poll question, which is, does your firm monitor the profit and loss in real time at the project level? In other words, do your managers have access in real time to understand how well a project is performing? And Beth and Bob, I can't actually see if this poll is being run, so maybe one of you can just let me know what the audience is seeing. For some reason, my broadcast controls are not showing that. So I want to know, does your firm monitor the profits in real time? So the answers are yes, you can monitor it in real time. Yes, but only when a project is completed. No, we have no way of knowing. And lastly is, I have no idea, it's not my job. So let's see how it's going. I do see there is a survey page. I see some answers are coming in here. Not unexpected here. So I believe Beth told me it takes about 45 seconds for the survey to finish, so get your responses in. It's really appreciated. And I think it's pretty much held steady here. That's if you want to send the results to the audience. What I'm seeing here is the majority of you do have visibility into project accounting. About a quarter of you only really understand it when the project is completed, which I pretty expected. Another quarter of you have no idea about that. And a small 14% of you have no way of knowing anything about your project accounting. But it's pretty good news that about almost 40% of you do have it in real time. Carrie says she's not seeing the results either. So let's send the results to the audience. So Carrie, can you confirm that the folks can now see it now? Where about half the people are between, between only when the project is completed or it's not my job. Okay, so Okay, Olivia. Now I'm going to go back to my slides, Olivia. So are we on my slides now? What is project accounting? Okay, good. So project accounting is really about the details, whereas standard financial accounting is about the health of the business as a whole. So those standard financial reports are typically visited monthly or quarterly, but project accounting allows you to measure profit, losses, utilization, margins, earned value, and much more in a real-time basis, giving you the ability to see trouble when it's happening and make smart decisions to keep individual projects on track. So if you have, let's say, 50 active projects, an income statement will not tell you which of those projects are doing well and which aren't. But the project accounting gives you the insights which allows you to have a positive impact on those standard financials. Okay, so but they all roll up, obviously. All those projects all roll up to your company's financials. Okay. Most managers don't really have insight into your firm's full accounting system, and that's okay, but too many firms have their administration departments or their office manager issue a report or a bunch of reports and deliver these to the project managers on a regular basis, like weekly or monthly. And those are the kind of reports I used to get when I worked at a large architectural firm, an international firm. Every 2 weeks I would get these reports, and they were overwhelming, and they were really something I couldn't do anything with. But this is a process of these reports being issued that began long before computers hit the workplace. And for some reason, our industry has had a tough time recognizing that highly trained professionals are capable of being responsible for more than just executing the services that they were hired to do. They are really not just trained monkeys. They're bright individuals who are looking for an opportunity to prove their value. So while there's no real need for managers to have access to the firm's big picture finances, project-based accounting turns every project into its own business and every manager into the CEO of that business. And there's actually a formal term for this. It's called a Chief Project Officer, or a CPO. If you look that up, you're going to find it's really a trending thing now in professional service firms. These Chief Project Officers need to be empowered with the kinds of information that gives them access and control over the profit or loss of every project. So just like your firm running those regular income statements on a monthly basis, your managers should have the ability to see instantly each of the projects that they're working on, how it's performing, and kind of make decisions on a day-by-day basis that is going to ensure its profitability. And by breaking down your accounting at the project level, you have much better control over those firm financials, or the potential for your firm's financials. So you can see at a micro level where the mistakes are being made, where the problems are happening, and then you can take action. Now the ultimate goal is to fix the problem at the source in real time rather than waiting for weeks to pass before you are even told that that problem exists. And by then it's really probably too late to take that corrective action. And this is what gives you the potential for achieving profit potential. Okay. Now this might seem a little strange for some of you, but your clients will in fact be happier if your firm is more profitable. Your financial strength enables you to treat your clients better, give them adequate attention so that you can provide them with the best service. And similarly, your managers are going to be happier. We all know knowledge is power, and giving managers access to this type of information will help them serve their clients better while also proving to a firm or to the firm's owners that they're making money for the firm. And this is really intoxicating. So as I mentioned, there's a really, I've been in so many firms that there's a really common malaise or dilemma. One of the hardest things that we confront in our professions is looking into our clients' faces and simply saying no. We take special pride in our ability to serve the client, deliver the finest possible project. It's actually a matter of professional pride, or I actually think it's more accurately described as an ego problem. However, when a manager can see clearly when the client is taking advantage and overreaching what is expected, they actually have pretty powerful ammunition. There is no reason you can't continue to serve your client to the best of your professional ability, but being able to see that what is being asked by your client, it may create a financial problem, or is in fact not even part of the contract. This is what you really want. Only then can you decide if what you're about to do is going to be a freebie or something that you might need to call out as an additional service or a change order, whatever you might refer to that as. But again, most managers I meet, they say yes first, it's reflective, they say yes, and then they run into trouble later when they realize the implications of what they've just agreed to do. And you've also given your client kind of like expectation that you will continue to do free work for them. Now the concept of project-based accounting is really simple. It utilizes simple accounting principles. So I mentioned earlier we're looking at the financials of individual projects, not the overall firm. And each project is its own little business. And while the firm's financials are reviewed monthly or quarterly, your projects have a very different period. And I really believe that period is no less than daily. And there's really no reason project accounting can't be monitored on that daily basis. After all, think about the impact of waiting merely 1 week to realize that a course correction is required. Now there's that old adage that time is money, and typically that's in a slightly different context, but it's clear that every day wasted without knowing if you've made or lost money on a project could be hundreds, if not thousands of dollars possibly lost considering the size of the project and the team assigned to it. I'd like to think of this in a different way, so bear with me. You might step on your scale once a week to see how your weight is doing. But all those small decisions you made throughout the week, day to day, like what you eat, are you exercising, these are the things that really impact the information that you get once you step on that scale. And when the bad news is delivered, it's really not so easy to identify what the problem is or when it started during that past week. Personally, I always know it has to do with glazed donut habit I have, but the point here is having access to information instantly allows you greater control and makes achieving the larger financial goals possible. And lastly, project-based accounting allows you to identify which of your projects are the winners, but more importantly, which of your projects are losers and where that loss is happening. And once you know that, you can take action and fix it. And by the way, as a slight segue here, I'm really not using this opportunity to take you into our software, our course solution, but not only does our course solution allow you to see those projects and where within those projects, but it also allows you to identify those people, those individuals who are working on those projects, and are they in fact profitable or are they dragging the project down. I will be doing a couple little screenshots of our solution, but I would also suggest if any of you are curious later, you can always go to our own website and sign up for a demo and watch all of that at work. But I don't want to use this opportunity. I really want to just talk about the project accounting. So the first thing that is needed to help execute project-based accounting is for your projects to have a budget. And this is really no different than your firm having an operating budget in order to plan the coming year, know what will be your expenses, and will they be able to be managed, like what kind of income is going to be needed to be earned in order to pay for all those expenses. But one of the most unusual things I see in AE firms is where there is a total lack of a budget at the project level. And I'm also willing to bet that there's a number of firms here today that probably don't even have a firm's operating budget. You may just be operating because you've been in business for years and you kind of know what last year was and you just kind of use that, but you don't really sit down and map it out and think about it. But that is a totally different webinar. Now, when I ask about why these firms don't use project budgets, I hear excuses like our contracts are hourly, so there's no real need for a budget, or we just bill the client for every hour and they just pay us. Now, my obvious next question is going to be like, how much time is it going to take to do that work, and how many people will it take? And can you really deliver the project on schedule without, countless all-nighters? And I usually get back, vague responses like, we do this all the time, we can do it in our sleep, we've been in business for years, we know what it's going to take to do the work, and we just do it. Or if I push a little harder, I get something like, yeah, it takes 4 people, 6 weeks to do a project like this. It's all kind of from their gut. So anyway, after I finish pulling out my hair and I calm myself down, we're going to get into a discussion about what they think their business would look like if it operated this way. No operating budget, no roadmap, no accountability, just operating from your gut and expecting everything's going to work out because you're you're good. Once you can acknowledge that absolutely every project needs a budget, you are headed in the right direction. But what's even more important than the budget is your ability to monitor that budget, to measure your activity against that, and to do it in real time. And this is where implementing a system within your firm can make all the difference, because the right system can make this task effortless. And we all know that unless it's effortless, you all have better things to do with your precious time than deal with sort of the business side of your business. So having a system is critical to your ability to not only say what that you're going to follow project accounting principles, but that you're actually going to be able to deliver on that. And perhaps I am a little biased on this subject, but this is what we do here at BQE Software, which is to build those systems that enable this to happen. And the true value of project accounting systems is that they empower your project managers. Those of you who know me, you'll hear me use that word all the time, empowerment. Many firms serve reports to managers days or weeks too late. This is neither empowering nor effective. It's kind of like driving a tow truck out to rescue a stranded vehicle on the highway. You don't have to, you don't want to end up broken down on the side of the road or having run out of gas. You want to have immediate and clear information about the state of your vehicle. How much gas do you have in the tank right now? Will you be able to make it to the next gas station? Is your engine overheating? How is the tire pressure at this moment? Just imagine if every vehicle was simply a steering wheel without any type of dashboard. So we know that the finest projects involve collaboration. Architects working closely with engineers and other design professionals, and they each contribute their expertise so that the final result is successful on all fronts. And the same holds true for project accounting. So often we see poorly performing projects in firms where the staff is immensely competent to perform those services. The problem isn't in their professional skill. The problem is there is an absence of communication between the person who, let's say, negotiates the contract, maybe it's the partner or the principal in charge, and they're the ones establishing the fee, and no communication with the person who is actually charged with executing that project. I have seen situations where a principal, in their eagerness to win a client, accepts a fee that they know in their gut is a low ball. We all probably have seen this before in our firms. The manager is really in a losing position from the onset, and it's no wonder in situations like that that the administration in the firm wants to conceal this from the managers. It's discouraging to be working on a losing project. So even if this was a strategic business decision to take on a project like a loss leader like this that's not going to make you any money in the short term, the project manager needs to understand this. In fact, they may have thoughts on how that project might be delivered differently or staffed differently in order to be successful, but never is it acceptable to shield a manager from the budget and the project's performance. And indeed, I like to really use our software to show people how the managers should actually be tasked with putting a budget together themselves and comparing that to the fee schedule that a principal might have done in order to see where the shortcomings are. I'm going to take this one step further, by the way. For those of you who have heard me speak or attended my other webinars or read my blog articles, you know I'm a believer in the freedom of information. I'm the first person on that transparency train. Indeed, we make it possible in our software to allow you to empower every employee, not just your managers, to have real-time information into the performance of their projects, their own personal performance. We know that every employee has the potential to contribute to improving your project's performance if they have the right information at the right time. Most firms have their failures when they keep it's all under the lock and key or under the eyes of a very few people who in fact have, they're not out there in the field, let's say. They're not the ones doing the work. So some firms I see want to shield employees from the knowledge that a project is losing money. They think it's going to discourage the employees from working on it, or they think that the employees would become concerned about the health of the company and start to look for outside opportunities. After all, who wants to be involved in a project that's a drain on the firm? But for me, it's kind of like a parent. If you don't let your children know that there are some financial limitations to what you can have as a child, what you can do as a family, letting kids go on blissfully asking for everything and any toy, wasting resources, maybe it seems like that's smart parenting to some people, but regardless of the child's age, ignorance is not bliss. This is where entitlement breeds. It's the inability for one to understand the context and one's role in it. Okay, we're going to do another quick poll question here. So Beth, let's get that one cooking here. Which factor do you believe has the greatest impact on a project's profitability? So let's just see what you all think. Will your projects be more profitable because of the fee that was negotiated? Let's call it the contract value. Invoice frequency, do you invoice monthly or every 2 weeks? And how are you doing with your collections, your receivables? Is that going to make the greatest effect on the profitability? Or is it the hours that are spent by the staff, like trimming those down as much as possible? Or is it the time spent by managers overseeing a project? Which of these do you think is the single most effective item? And I see a lot of results are in already. By the way, I encourage you to fill this out as quickly as possible. I do want to get to some of the more visuals here, get through some of these points that I have to do. Okay, so are we published yet or not? 24. Still a bunch of you out there. I probably have bored some of you since my slides are terribly dull. I apologize, but we would love to hear from you. Okay, Beth, should we just publish these results now? So they do see the results now? Interesting. I think I have to send results to audience. Okay. So interestingly enough, 40% of you think it has to do with your staff and how many hours they spend working on the projects to make it profitable. 16% think it's the value of the contract. That's actually all a trick question for you. I have seen each of these, depending on the situation, is the major contributor. I have seen projects that have performed extraordinarily well simply because the principal negotiated an amazing contract value. And only 16% of you have seen that. But they all in fact do play a part in that. Let me go back to the slides now, Beth, if you can move that on. We're going to move to my next question about what makes up project accounting. Now here are the parts you need to think about. You need to have the ability to assign general ledger accounts directly to your jobs. For example, if you want all your income from a project to hit a particular income account, you should be able to define that. And also have classes that give you the ability for deeper analytics. I see a lot of firms who run a P&L statement, and they have one income line. It's sort of professional service fees. Boom, that's it. And the ability to assign to specific general ledger accounts gives you an amazing and bit of information. The fuel that runs all of this, by the way, is time and expense tracking. And I know that is the bane of many staff members' existence. We're going to visit that topic here. Allocation, an allocation tool, resource allocation, that's where you assign your staff, and tell them what they need to be working on when and for how many hours and for how long, and the ability to monitor that and see how are they doing. And also be able to project off of that and see, based on their assignments, is this project going to be profitable? So that allocation tool can be, depending on what tools you use, rather difficult to use. We think we've kind of licked it in our core solution, but if you don't have that, you really certainly can't project forecast your revenue. And also, if you tell your managers that 10% of a project's profit goes to their bonus, they're going to have the incentives to use these tools, by the way. And anyway, without these tools, anyway, project accounting is just that. It's just kind of like a phrase. Okay, next slide. Earlier I was talking about project-based accounting software, like what we build here at BQE, but the reason it's valuable is it makes it effortless for you to monitor profitability in real time. And I literally speak with hundreds of firms every single year, and there's one constant theme I hear. There's an extraordinary amount of effort wasted using Excel spreadsheets. To figure out how profitable a project is or how much to invoice, on and on. This is repetitive, time-consuming, highly prone to error work, and Excel, though some people love it and are brilliant at it, it is a beast and a burden. Over and over, I hear them admit that even though they've gone through this repetitive and arduous exercise of working with Excel, there's not a lot of confidence in the data. They inevitably have to chase after employees to provide their time cards, and once they're provided, they question their accuracy. They're never quite sure if they have all the project costs properly accounted for. And what's more frustrating is it's really a huge time suck. Week after week, month after month, repeatedly doing the same exercise and never really quite sure if it gives you the right information. So the beauty of a software system is it gives you the ability to get the real-time information about job costing. And the closer it is in real time, the more accurate it is. And not only the ability to see costs, but to understand its context. How does the cost compare to your budget? How does the cost compare to the contract? And what is your earned value? And some of you may know the earned value is really that holy grail for architectural firms, and I'll return to that in a little bit. Now, I just wanted to show you a little slide here. This is a screenshot of our core solution. I just wanted you to see how we can direct activities to income accounts within our general ledger. So depending how you form your general ledger for your firm's accounting, you can actually direct an individual activity. So you can start to run reports that actually show you where your income is coming from. So if your staff is doing, let's say, 3D modeling, you can actually, as an activity that they might pick on their time card, direct that to an income account called 3D modeling or drafting or whatever you have. And you can have many, many income accounts. And that's really a beautiful thing to see, where you don't just get professional service fees, but you understand what your firm's strengths are, where their time is being spent, and what kind of income is being earned from all that time. So having that ability to direct that. The other thing I mentioned was classes. Classes are really great. Here's a project, the Pasadena Elementary School, in which we can direct all the revenue, all the expenses to particular classes. This might be a class could be if you have multiple offices, an office in New York and LA or wherever they might be, you can actually run reports at the class level. Or maybe your classes are going to be principals or principals in charge or managers, and you can run reports that will break that income and actually the entire income and expenses at the class level. So having a system that does this for you so you don't have to waste your time figuring that out separately in Excel is a great help. Now, this is a screenshot of the core's, what we call a project performance window, and it's filled with these little widgets that are the KPIs, those key performance indicators that we think make a project manager instantly understand what's going on at this very moment in time, because this is real-time information. For example, I see in the upper left that there's $35,000 of work in progress. So that is time and expense that the staff has been putting in. Maybe that's all been approved by the managers and it's ready to be billed out. To the right of that, I can see that there's $36,000 that has been written down. Okay, so projects might be fixed fee, and you bill them not based on the time your staff has spent, but on the level of work completed. We're 75% done with this and 50% done with that, and you have a fixed fee contract, so you just bill them. But write-downs or write-ups occur because our system knows if you're billing your client so much this month to write down or write up the value of the records that were associated with this month's bill. So we take care of this all in the background. And notice how this project lost $36,000, but below it, the project actually has a 32% profit. So let me zoom in on that for myself so I could see that with you. So that project, we billed our client $197,000, but we spent $135,000 of our own money out of the firm owner's pockets to work on that project. And that's a 32% profit or a $62,000 profit. So there's other metrics there. Notice down below there's a contract analysis and a budget analysis. So we were talking earlier about when a principal might tell their client, this is our contract value, and then the manager needs to compare that when he puts their budget together. And this gives you real-time analysis of how they are performing. Let me see what the next slide is. So I'm just going to scroll down the window here. You'll notice there's an earned value widget, which is showing us 3 lines. This yellow line represents the money we spent. It's a cumulative graph. So the more we work on it in any particular month, that steeper it goes. But that's the yellow line. That's the value of our investment in this project. The green line is representing what we billed our client. And that blue line is the full value if we could have billed them everything. If you ever see your green lines dipping below your yellow lines, those are losing, so we're going to be warned about that. And whenever I see a green line burst through and above the blue line, that's a terrific place to be. That's usually in the situations of fixed fee projects where we're very efficient. We've negotiated a great fee, and we can bill based on our level of completion, and it's in excess of the time that we've actually spent. So there's a few other widgets in there that I don't have time to talk about today, but if you go to our live demos that we do throughout the week here at PQE Software, we can dive into those a little bit deeper. Let me see what else I got here. Okay. Now, the foundation of a project accounting system is your ability to track your time and your expenses, and in order to do this successfully, it needs to be painless. So whoops, going too fast. So it needs to be painless. We have to eliminate the friction. And that's the thing that causes irritation to your employees. That's why they run away from you when you come around badgering them to get their time cards done. So instead of having them fill out generic Excel spreadsheets, which is also something that is not typically close at hand, a proper software system makes it effortless and is always at hand. So I'm sure every one of your employees has a mobile device. That's the thing that is never more than a couple of inches away from their hand at any one time. And it's also probably the device that they're staring at more than their computer. So encouraging them to use their mobile device for time and expense tracking by providing them with a solution that is as mobile as they are is a great way to remove the friction of time cards. And your time and expense tracking system should allow you to easily control the projects and phases that employees are allowed to work on. This is actually kind of, for me, the biggest benefit to having a system is I see so many firms that have 50 active projects, but one individual employee might only be working on 5 projects or 10 projects, but they are looking at master lists of everything possible, every project in the office and every activity in the office. And this is like being presented with a going to a restaurant. There's a 12-page menu, and it's just overwhelming. By the way, it's also why the Boeing 787 Dreamliner takes only a fraction of the time for a pilot to be trained on it compared to the old Boeing 747. The cockpit of a 787 only provides the pilot with the information and the buttons or whatever that are relevant for that moment in a flight. And when they're 30,000 feet in the air at cruising speed, seeing buttons and information about landing gear isn't really relevant. And that's the beauty of assigning staff to their projects through a system and assigning activities and expenses to those projects so that your staff members only have to select from a very small menu that's all relevant for them and the projects. Now, a proper time and expense tracking system will allow you to also make smart billing decisions in real time. It feeds your project accounting dashboards and the reports that you will never have to second guess if you are billing appropriately. And I am reminded of firms that when I ask them how do they prepare for their billing, they usually respond with a comment like, well, I call up the project manager, or I sit them down, and I ask them, how complete are you on your project? And they stare up at a ceiling, they twiddle their thumbs, they shuffle through some red line drawings before responding back with, we're about 75% done with this and 50% done with that. It's all really very subjective, and this is just a crazy way to run a project. It's an unconscionable way to run a business. Project accounting gives you the access to information that instantly compares how a project is performing against a budget, not just with regard to the hours, but also with regard to your dollars. Sometimes your budgets are fine for hours, but the costs are out of control because your staff who's working on this, they might cost the firm more than originally planned. Your profitability depends on so many factors. Who is doing the work? Are they exempt or non-exempt employees? What are their bill and cost rates for those individuals on the projects and the activities they perform? Is this service they're doing, is it billable or is it not? Is it subject to a fee cap? Is the expense a reimbursable expense? Is there a markup on that reimbursable expense? There's just too many variables to be expected to be understood by any reasonable person. So that's why a solution or a system needs to be put into place. And with our solutions, we give you insight not only into performance of your projects, but the profitability at the distinct phases. Perhaps you find yourself regularly making a nice profit in early design stages of your projects, but you notice that during the contract administration phase, your profits evaporate. We see this frequently. And it really happens because you control the work during the design stages, but once it leaves your office, it's under the direction of a general contractor, you're really reacting to conditions outside of your control. You can easily underestimate the work involved since you don't ultimately select or direct that general contractor. So our systems help you identify this and lead you to recognize that perhaps that service should be billed hourly and not fixed fee in future contracts. You should have a system that enables you to forecast your workload, determine which employees are over or underbooked, who's available to work on that new project coming in next month, and also forecast the revenue you can expect into the future months based on your resource allocation, based on those project contracts, based on the billing rates for those projects, and your staff's availability. And when properly utilized, you will know if your operating budget income requirements are going to be met. Will you make payroll? Which projects are running dry? It all comes down to the individual project and how they are managed in order to achieve the forecast expectations. And if you don't have a system to make all of this happen, then you're not in control of your business, or you have to spend too many hours repeatedly doing analysis, which once completed needs to be started over again every single month. It's a never-ending nightmare. On here. What are we looking at? Budget versus actual. Okay, so what happened to this? This has gone back. Profitability, earned value, deliverables, and milestones. Your earned value depends highly on those deliverables. Just because your staff is spending time on a project doesn't mean progress is being made. Having visibility into what deliverables are expected on what date and how much progress you've made toward achieving this is something that simple time tracking can't provide, but a well-designed project accounting software solution makes this effortless. Okay, so I think we have another poll here, Beth. So we're on our penultimate poll question here. Does your firm use any software tools for resource allocation? Assigning staff to work on projects and activities during predefined dates, and then using that tool for forecasting of revenue or forecasting the staff's workload. So let's take a look at the polls. Okay, so this should be launched now, Beth. I don't see anybody putting in any responses yet. So the questions are, yes, we do have these resource allocation tools. Okay, they are coming in. They're not coming in on my screen. We do have them, but they're only for staffing purposes. Yes, we use them both for staffing and for forecasting. I see the results coming in. No, we just hope the work gets done. Or no, we tried to use tools like this, but it takes too much effort to keep a schedule updated. So if you could please respond to this in the next 30 seconds. And then I'll have only one more poll question for you, and then we'll get to Q&A in just another couple of minutes here. And Beth, if you can just tell me when you send the results to the audience and when I can continue. Last chance, guys. Put your results in, please. Okay. So we see you do use, 44% of you do use a resource allocation tool for both staffing and forecasting. That is fantastic. A little less of you just say, no, we just hope the work gets done. And then a small percent of you have tried it and just really decided you can't use them. And then 14% of you use it, but only for staffing. So that's really cool to see that. So thank you for filling out that. I'm going to move on to my last couple slides here before we get to Q&A. I just wanted you to see the kinds of things that happen in solutions. So this is a screenshot of a core dashboard. We do allow your staff to create their own dashboards and fill them with widgets. This is just an overall financial widget, and you can filter them so you can really track information that's meaningful for you. I know a lot of project managers like to create dashboard widgets, dashboards for their own individual projects, and fill them with all kinds of widgets that help them see instantly how things are doing. So when I talk about being able to monitor daily, you can. This is all constantly updated in the back by the system. The minute an employee adds another hour to their time card, everything's instantly propagates throughout the system, throughout every dashboard, every bit of information, every report. So very visual dashboards to give you indications. It's hard to see, but at the very top right of my screen, there's a few icons with these little red badges on them. These are things like notifications. So having a system that will let you know, there's an invoice that hasn't been paid on a particular date, or there's a invoice that I need to review, or my staff has just completed their time card and they want me to review it. All the kinds of things that the system self-monitors and lets you know you better pay attention to that. That's ultimately incredibly valuable. This is just a screenshot of a standard Gantt chart that you would probably all be accustomed to, so you can see those various activities and manipulate them in a timeline. And as they start to be used by your staff, they actually change their colors and become more and more filled up, and you can understand. And there's more columns that you can see about the level of completion. So these are really nice tools that your systems should have that allows you to manage the work on your project. And then you can even take these and turn them into forecasting tools. So here I'm looking at a forecasting on a monthly basis of all of my projects or the projects I manage, or maybe it's all the projects for the entire firm, and what kind of revenue we can expect. So based on those resource allocation tools and the billing rates for my staff, what kind of money should I see every single month? And at the bottom line on those totals, you would hopefully see there's enough income planned for the month on those projects to manage your normal overall operating budget, those kinds of expenses you have. That same little screen can be modified to show me, hey, not just my revenue, but let's take a look at my employees and see who's overutilized, who's underutilized. Maybe I need to move some time around on people. So having a nice tool that's easily editable and then compare that to your income means that you're going to be able to manage your individual projects and overall all the projects for the firm that will result in a good cash flow month by month. By the way, here's another dashboard. So this is a guy named Scott. He created his own personal dashboard. And it gets you, you'll see in the middle there's a long horizontal widget called Project Status Widget. So he's filtered this for the projects he manages. And you can drill down into that and see real live information about what is my contract or my budget. You can toggle this widget between budgets and contracts. How much have we billed? How much have we spent of the total project budget or project contract? What's the value of that work in progress that we have not yet billed for? And does my client owe me any money? Maybe I'm on the phone with a client and we're about to talk about the project, but I noticed that they have an outstanding receivable. I could talk about that because I know it exists here. Some firms like to make the project managers the good cops and keep somebody in the administration department as the bad cop in collections. But we find great success with managers who've earned the trust of their clients to be open and honest about the state of the accounting. So lots of good information on a particular dashboard right there. Guys, I have run long, so I have one last poll question here. Then we're going to run to the Q&A. So Beth, let's launch this last poll question, which is how does information about project performance get to the managers? So is it that the administrative department prints these out regularly and leaves them for managers to review? This is something I talked about at the onset. Are managers responsible for getting their own information, running their own reports, figuring it all out, maybe coming to sit down with a partner and talk about it on their own? Do you have no formal process for issuing and reviewing reports? There's really nothing in place right now. Or you have no ability at all to understand at the individual projects how they're performing. So please, that's our last poll question, and we're going to move to Q&A at the end of that. I'm seeing right now that overwhelmingly many of you are leaving it to your managers to responsible to run their own reports. Oh, actually, I wanted to show you, since I'm talking about reports right now, I'm going to show you before we get to Q&A some sample reports that our standard reports that we issue in our core solution. So let's get this one done, and we can, since we're talking about reports, look at it. Okay, so the audience sees it now, and so nearly 50% of you say the managers are really responsible for doing their own reports and dealing with them. 32% say it's left to admin, and a very small percentage of you, 3%, have no ability at all, and 18% have no process at all. Okay, so what I'm going to do now, okay, before I get to the questions, Carrie, let me just do a couple more slides here, because I just wanted to show you the kinds of reports that you can get out of systems. Now, granted, I'm just giving you the reports from our core solution, and I'm not going to dive into the data here because there's too much to talk about. But on the far left, you see a profit and loss statement at a project level. So again, don't just run profit and loss statements for your firm. Every individual project can have its own profit and loss statement. And then on the right of that is a budget comparison where you can see what have we budgeted for hours and dollars for the work, the services, even if you wanted to budget your expenses. How much have you spent and what's remaining, and are you over or under? Taking a look at your project's work in hand. How much revenue can we expect to get in the future based on what's under contract right now? What are our current contract values? What have we spent so far? And what's that work in progress and what's remaining? Write-ups and write-downs I talked about a little bit earlier, but this is where you can drill down into the individual write-ups and write-downs at the employee level and see which of your employees have had to have their time written down. Other employees might have their time written up, and that's commendable. Work in progress, really being the ability for your managers to take a look at what's about to go out the door in invoicing and decide and determine, what they should do with all that time. Is it all billable or not? Should some of that stuff be held off till next month? Percentages billed, ability to analyze your contract values right away and know how much of it's been billed and what's remaining. It's kind of like a little bit about run rate. Managing project expenses and project time entries, and that's about it. So I apologize for having to running long here. I see there's a question. So
yeah, thanks, Dave. Let's get to just a couple questions here before we have to sign off. But you can still enter some questions in the Ask a Question box as we talk. So first question here is, how will using a project accounting software make my job easier as a firm billing manager?
Well, one of the common things I see is the billing managers don't really have access to the projects themselves and know what they should be billed. So they're generally running around chasing after project managers who are not always available on their schedule to get them answers. So the beauty of a software system means the managers who have access to this kind of data on a very regular basis and are trained to use it on a regular basis are always informing the system. They're always letting the system know that, this time is billable, it's not billable. Bob worked 4 hours doing something, but I'm only going to bill my client 2 hours for this. And they can review these in our system when the employee submits their time cards to the managers, make those changes, and then the billing manager doesn't have to go through all of this in detail. They would be assured that the The project manager has reviewed and approved people's time cards, made the changes that they want in the the billable hours of billable value of it, reviewed vendor bills. Maybe you've got consultants and so forth that you aren't sure, is that really the right amount for this project, because you may not be privy as a billing manager to the nuances of a project, but the project manager is, and he'll say this is an approved invoice, let's include it in the bill if it's a reimbursable expense. So on and on. It means that you don't have to wait for managers. That's ultimately the problem, is that they are trained to keep things moving smoothly, and the billing gets done, because cash flow is king here, getting those bills out the door as quickly as possible and not having them held up while managers are off at client meetings and so forth.
Okay. We're going to take one more quick question here, and then we'll have to wrap it up. I need our staff to be more accountable in entering their time and expenses regularly, as well as other project information into the system. How will project accounting make it easier for me to manage my staff?
Yeah, well, the common thing that firms have, as I mentioned earlier, is that the staff has difficulty in current systems to put in their time and expenses. So that's why I was talking about using mobile. So for example, our core platform has a phenomenally robust mobile app that you can easily on the road or wherever you are, even in the office, put your time and expenses in. It's fun to use, it's easy, and it's smart. Again, it knows what you're working on. It can even track you physically and let you know that you're at a client site for 2.5 hours and suggest to you that that's a time entry. So a lot of firms just have to chase after their employees, and the problem with chasing after them to do their time card is it's Friday and they have to put together what they did on Monday, and they don't know whether they worked 2 hours or 2.5 hours on something, and so they just put 2.5 hours. Well, that's unfair to the client and the project, because week after week, day after day, those small incremental mistakes means that that's going to add up to a large error at the end of a project. So I think ultimately it is having software systems that are easy, always present. You don't have to wait till you get to the office to put in your time card, always accurate, and tailored specifically for that employee. I also noticed there's a lot of questions that are coming in that I can answer if we're out of time here, Bob, in a PDF, okay, and we can send those out.
Okay. Let's grab one more quick question, then we'll wrap it up. Here. I'm a project engineer, but not a manager. How can I get how can I get to use this on a project as freeware to test? Do we have any trial version to test on a small project?
Well, hopefully any solutions you're considering for your firm, you should be able to get a trial version. For example, our core solution has a 2-week free unlimited use trial. It even comes with sample data if you want to see what similar projects work like. You can do everything from creating projects, clients, time entries, expense entries, making your own invoices. You can even create the invoices on the mobile app. So you've got 2 weeks to play around with it, but any solution you're considering, that should be a requirement.
Okay. Well, the questions that we didn't have time to get to today will be available online at csengineermag.com/continuing education. So now's the time you can download your certificate of completion from the event resources section on the left side of the dashboard. And after downloading the certificate, enter your name in it and print and save a copy of the PDF. Note that the certificate will be available only during the remainder of this webcast. If you missed our note at the beginning and you are watching the live webcast with a group on one person's computer, please download the multiple viewer registration form and complete and submit the form to receive credit. Additionally, this webcast has been recorded and will be archived on csengineermag.com/continuing education. Viewers of archived webcasts have to click on the quiz button on the event on the CS Engineer Mag website to take the quiz on the presentation.
Olivia's just saying keep going, by the way.
So thank you to all of our speakers and to everyone who joined us today. This ends today's webcast.
Okay, thank you very much, Bob.